Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, October the 11th. The year's 2021. Let's talk trading. Where to begin? These videos are for educational purposes only. Your results may differ from mine. I received a YouTube comment reply from a trader that wanted to know if I have a concise document that says how I trade and walks you through it. And, maybe I could start something where you start with one method, then you add on another method. Okay, well, as Anthony Robbins says, if you ask a better question, you get a better answer. So, what I'm going to try and do here this week is convince traders where to begin. And so, if you're an experienced trader and you're profitable, you probably know this, but it might be a refresher. Not sure. But the bottom line is this. You begin with risk management. Because if you have no money, you lose all your money, you can't trade. So, you have to make sure that doesn't happen to you. And the way you do that is by determining in the beginning, it's something that you get to decide how much you're willing to lose per trade. So, for example, let's just say you're going to start out with a $100 account. And the whole purpose of this $100 account is for you to learn how to trade. It's not where you're going to take this $100 account, make enough money to buy a Lambo and retire to Monaco. Nope, or Dubai. That's not what this $100 account is for. This is so you can learn the basics of trading and see if you can master some of the simple principles, one of them being your risk management. So let's say you've got $100 account, and let's say you don't want to lose any more than $2 per trade. So maybe you have a position size of 0.01, a dime a pip. Okay, so you're willing to lose 20 pips on any one particular trade. Now, for some people, they could go, oh, that's way too much. And some people go, oh, that's not enough. So you have to determine what not enough is and what too much is. I can't determine that for you, but for illustration purposes, let's just say $100 account, dime a pip, most you'll lose per trade is $2. We're going to use 0.01 mini lot, okay? So, what do? What's the next thing we do? Well, we've got the risk management down. So what about on the take profit side? When do we take profit? Well, we could say we take profit when we start out. Let's just grab a couple of pips. Let's cover the spread commission and let's try and make 2 pips. Shouldn't be too difficult, right? But it could be, but you'd think it'd be relatively simple. So, but the big thing is right here. It's the brain management. Okay, number one, if you put your stop loss in place, you should not have any fear of what happens. You know the worst thing's going to happen is you're going to lose $2. So so you can remove that. So there should be no fear of taking the trade when you get the signal, right? No fear at all. The signal appears, you take it, put your stop loss on. The worst thing that happen is you lose $2. So, of course, the R&R people go, well, if you lose 20 and you only make 2, you got to make 10 pips, 10 profitable trades to make it up. Yeah, that's true. But for illustration purposes, maybe after we get up so many pips, we quit. Or maybe instead of letting it run against us the full 20, we exit out at maybe 5 or 7 or 10. That 20 just might be the catastrophic stop loss that we put in case things really go south. And as I said before, we see profit, we see if we take it back before the market, or we take it before the market takes it back. Or maybe we ratchet up the stop. It's one of those things, once again, that's kind of up to you. But, so what do we start out? You wonder about indicators. Well, you may recognize this as TRO Einstein. And so you load that on your chart, and when you do, it's going to start over. So right now, this is when I began. So why did I call it Einstein? Because price, whether price is up or down, is relative to when you set down, when you start. Doesn't matter what happened before or after, only matters now. So, and we've got these lines, I believe, let's see, they are set at 2.5 pips away from this line. So if price moves up 2.5 pips, you take the trade. If it moves down, you take the trade. Now, this is the ask, this is the bid. See, it represents here 25.8, 27.2. So you can see where bid and ask are relative to where you opened at. So the idea is to go long here, go short here. Now, you might only want to do one or the other. So for example, from H1 down is red, you might only want to short, or you might want to say, well, the rest are green, I only want to go long. But we're coming up to the top of the hour here, the last 5 minutes. Sometimes it can get pretty hairy, sometimes it can be dead. But this is where you begin. This is where you start, because now you're going to take a trade based on that horizontal line. And no matter what method you choose, you're going to be entering at a particular level. So for example, had you taken this trade right now, you'd see that it moved your way a little bit, but you couldn't exit the trade for a profit quite yet. But of course, I know what the next comment usually is that, oh, you could get whipsaw, you could get chopped up, blah, blah, blah. Well, yeah, that's true. You could. But the question is, couldn't that happen on any trade? So, and the answer is yes, it could. So basically, you sit and you watch and you see what happens. So as I mentioned before, we're almost at the top of the hour. Not a particular time that I would want to take the trade. And of course, we're looking at the 1 minute chart. You could look at the 5 minute chart. Now, when I do that, it's going to change the Einstein line once again. But you pick whatever time frame you want to trade off, remembering price is the same on all charts, meaning, if the price right here, you're looking at this chart, you could be looking at monthly chart, and unless that bid ask changes, price is going to be the same. Daily high is going to be the same, daily low is going to be the same, the daily open is going to be the same. So when people talk about trading charts, they're way off base. You're trading price. Actually, you're trading the price of the pair, right? And so one of the things is we like to do is look left, and you can see right here, kind of picked a congestion area. That price has left to the north a couple of times, left to the south once. This one right here would have probably resulted in a stop because it pulled the other way. But this is where to begin, right here. So, after you take 10 trades, see if you're up or down. After you take 20, after you take 50, you should probably do this for at least a month. Not worried about all that other stuff, but just working on your fundamentals. Exiting when you're supposed to, entering when you're supposed to. That's where you begin, because then the next is methods. I mean, as you probably know, one day I might be trading one method, the next day I'm trading something different. Why? Well, I've been doing this been doing online trading since 2001, and I started trading back in 1977. So I've been doing this a while. But, I look at things like daily open, weekly open, monthly open. I look at, pivots, rat zone, wick zone, buy zone. And this, in essential, is basically a buy zone, the Einstein. It's just based on when you start as opposed to, the hours starting or the day starting. But the principles hold. And that is you enter at the line in the direction of the candle. Price is moving. So with the M5, you don't want to go against the M5 candle color. And here we are at the top of the hour. And let's see what happens. And remember, most of trading is waiting. So you just wait for your entry signal. And then you wait for a reason to exit. So you sit and you wait. And in this particular case, if you look left, right here, you can see price has been moving up out of this area. Now let's see. Well, since it moved from a lower 1, 2, 3, 4, 5, 6, 7 times, so that might be reason to not take the trade. But that's, kind of moving ahead, because right now you just want to take the trade when you get the signal, because you got to learn how to do that. And you can't be thinking about the outcome ahead of time, not at this stage. Just take the trade. Worst thing you're going to do is you're going to lose $100. And if you can't afford to lose $100, which I think would be really hard, you think you'd have 50 losses in a row over time? I mean, you could have 25 losses in a row, win one, and then have another 25 losses or so in a row. I just don't think that's going to happen. I could be wrong, but if you just sit here and take these trades as they appear, you're going to learn how to trade. And what's really funny is if you're profitable, you might not ever move on to another method, because almost with the exception of the weekly gap fade and pivot points, everything else is horizontal line. Rat zone, wick zone, buy zone, horizontal lines. So, fellow traders, once again, I hope you had a fun and safe weekend. Hope you have a profitable trading week this week. And if you have any questions, feel free to ask. And when you sit down at your trading platform, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And don't forget to subscribe and smash the like button. This is the Rumpled One, over and out.